Namaskar and good evening. As we saw in the previous video, the third quarter result season is on at a good pace. Results are coming. The best of the lot, the biggest of the lot are declaring their results. Now, today we will see the Tata's jewel, Tata Consultancy Services. Tata Consultancy Services has risen as the foremost in the group of Tatas. So we'll see its financial results for the third quarter ended December 31st, 2018. The revenue has risen by 20.8% year on year. Revenue has risen 20.8% year on year to 37,338 crores. Now, in terms of constant currency revenue growth, it is 1.8% plus quarter on quarter and 12.1% year on year. Reasonably impressive year, especially year on year and also quarter on quarter. The net income is 8,105 crores, which is up 24.1% year on year. So, the gross revenue 37,338 is up 20.8% year on year, and the net income 8,105 crores is up 24.1% year on year, which means the revenue margins have improved. Operating margin is at 25.6% now, which is slightly more than last year, 0.4% higher year on year. The earnings per share is up 26.6% year on year to 21 rupees 60 paise. EPS, so revenue is up 20.8%, net income is up 24.1%, and EPS is up 26.6% year on year to rupees 21.6. Now, the net cash from operations is also impressive at 8,662 crores, 107% of net income. So, cash accretions are quite good. Dividend per share that they have declared is 4 rupees per share of rupees 1. The record date is 18th of January and payment date will be 24th of January. The market price at present is 1,843, whereas 52-week low was 1,368 and 52-week high was 2,273. So it's somewhere in the middle between 52-week low of 1,368, 52-week high of 2,273. It is now at 1,843. Price earning comes to 21.33. Not bad for a company of the stature of TCS, which is giving a quarterly dividend of 400% and having huge cash reserves. So, price earning of 21.33 is not at all bad, and probably it can be a little more. The face value is rupees 1. Now, let us look at some of the business highlights and other points. The BFSI growth continues to accelerate. BFSI means banking, financial services, and insurance. It is also growing at 8.6% year on year. In Q2 also it has grown by 6.1%. Now it is growing by 8.6%. BFSI is the fastest growing, it looks like that. Now the digital revenue is 30.1% of the total revenue and has gone up by 52.7% year on year. This time, there is a shift in TCS attention. Now UK and Europe are leading the growth with 25.1%, not USA. Please remember, UK and Europe are leading the growth with 25.1% year on year and 17.6% year on year respectively. UK 25.1, Europe 17.6% year on year. Now, 292,000, that is 292,000 employees have been trained in digital technologies, and 318,000, that is 318,000 are trained in agile methods during the quarter. Now, the industry leading talent retention, IT services attrition rate is hardly 11.2% in the last 12 months. Now, Rajesh Gopinathan is the Chief Executive Officer and Managing Director. Rajesh Gopinathan is the Chief Executive Officer. Earlier, Chandrasekharan was there, and now, of course, there is a succession plan at TCS. Wonderful people are there. So, he says, we are wrapping up 2018 with a strong revenue growth of 12.1% in the December quarter, which is the highest in 14 quarters. So, the December quarter revenue growth of 12.1% is the highest in the last 14 quarters. So, a reasonably good quarter with continued growth acceleration key verticals and across all geographies. The strong client metrics, including industry leading growth in digital services, a very strong order book and pipeline, are all validations of our customers recognizing our differentiated capabilities. It's true. TCS has been growing the fastest in the Indian software industry. Especially December quarter growth is quite good. This quarter, he says, we have launched a new brand, TCS Payset, embodying our capabilities and offering our customers a line of sight to success in the business 4.0 world. Now, N.GANAPATHY Subramaniam, Chief Operating Officer and Executive Director, says, our location independent agile methodology. This agile methodology is being implemented by TCS very aggressively. It is location independent and machine first. So, this has been helping us to advance CEO level enterprise transformation agendas. Now, see, with this CEO, at the CEO level, you can arrange for the transformation agendas. Now, let us look at the Q3 segment highlights. So, as we have seen, revenue growth continues to accelerate in BFSI, 8.6% in current quarter versus 6.1% in Q2. Growth was led by which industries? Energy utilities, 18.1%, life sciences and healthcare, 15.7% growth, communications and media, 10.8% growth, and retail and CPG, 10.5%. Now, how are the markets? Revenue growth accelerated in all the geographies compared to Q2. The growth was led by UK, 25.1%, Europe, 17.6%, Asia Pacific, 12.6%, North America grew by 8.2%, India grew by 9.7%, and Latin America grew by 7.6%. So, basically, UK and Europe are leading the growth, but growth is happening everywhere. The emphasis has shifted from USA. That's what we need to note. Now, what about the service? We have seen the industries. Now, let us look at the services. Consulting and services aggregation experienced strong demand in areas like mergers and acquisition, global shared services, and enterprise agility. TCS's location-independent agile methodology is resulting in large agile wins with the marquee clients. Big clients are coming for this agile methodology. The next is the digital transformation services. It has given a name, LOT, L-O-T, LOT. That is, TCS Interactive and Cyber Security had an exceptionally strong quarter. LOT saw strong growth and deal wins around our digital twins, fleet management, and energy management solutions. TCS has launched the Intelligent Power Plant solution this quarter. So, a new solution has been launched, Intelligent Power Plant solution. Then, TCS Interactive also saw significant offtake for digital content, digital channels, and digital commercial services. Now, the next is cyber security services. That also saw strong growth and around managed security services. You see, security services are no more people driven. It is majority driven by software, like the TCS's cyber security services. Now, there is another thing, cloud services. That also has grown very well in Q3, benefiting from enterprise scale cloud adoption and its linkages to innovation. TCS is specializing in all these four. The another is cognitive business operations. Cognitive business operations. That's a strong growth powered by MFD, MTM, and cognitive services. So, TCS has seen strong demand across mergers and acquisitions, digital infrastructure, cognitive business command center, enterprise business process, and so on. So, TCS has identified 5 or 6 different software platforms, program platforms also you can say, around which it is building its software capabilities, and they are in very strong demand from clients around the world. Now, these are the things required. Then some key highlights, how where from the demand has come. So, TCS has been chosen by a large investment bank and German financial services company to conceptualize and implement a digital transformation plan. One investment bank and German financial service company. Another leading Malaysian oil and gas company has chosen it as consulting partner to deliver enterprise visualization platform. Another large Brazilian bank has chosen it as the primary vendor for digital transformation and innovation. Another Australian public utility and gas company entered into a new 3-year contract for agile transformation. It was awarded a multi-year and multi-million dollar contract by a global hospitality chain to be the IT transformation partner. It has been chosen by a leading Canadian insurer. I'm just telling you, the across the globe and across industries and across services, TCS has been winning multi-year deals. So, another global leader in pool equipment solution wanted that LOT enabled and pool equipment service. A leading North American telecom service provider wants it to expand its load platform. Another travel commerce platform as a strategic partner has chosen TCS. A global multi-food food products group, it wanted all its disparate business services to be brought on one platform. NMBS war SNCB, which is the Belgian rail, has also selected TCS on a long-term strategic partner basis. So, awarded a multi-year, multi-million dollar contract by a large German insurance firm. And Thomson Reuters has partnered with TCS in product engineering and sustenance services. Thomson Reuters is a famous firm. And again, TCS has been selected by a global aluminium manufacturing firm to optimize its procurement spend. Another British retail and commercial bank has taken the service of TCS to simplify and transform its services. Another leading North American insurance firm has taken TCS as a strategic partner. So, like that, the list is long and list is big. Big people are choosing. And that's what we know. Probably small people also may be there. Whether TCS has got time for small people now, I don't know. Because the list includes all biggies. Now, when you look at human resources, Net addition in Q3 is 6,800. And net addition means people who are coming in minus people who are going out. 6,827 employees are the net. Now the total employee strength is 4,17,929 on a consolidated basis. Women workforce constitute 35.8%, while the number of nationalities or nationalities represented in the workforce are 151. Over 2,92,000 employees have been trained in digital technologies. 3,18,000 has been spent in agile methods. So, one of the largest agile ready workforces is with the TCS. It is having the best retention rate, the attrition rate being 11.2% LTM. Now, Microsoft has named it as Azure Expert Management Service Provider. Now, we'll again take a look at the 3-month period results. Consolidated statement. The revenue has improved from that is year on year. Now we are looking at last year to current year, quarterly 3-monthly period. Last year 3-monthly period, current year 3-monthly period, latest December. Revenue has increased from last year's 3,09,000 to current year 3,73,000. This is all in millions. So many millions. If you convert it to crores, 30,904 crores last year, 37,338 crores this year. Now, cost of revenue is 17,862 crores last year, 21,735 crores this year. Now, gross margin is 13,042 crores last year, 15,603 crores this year. Operating income is 7,781 crores last year, 9,564 in the current year. Income tax 2,100 crores last year, 2,590 crores this year. Net income 6,531 crores last year, 8,105 crores this year. Earnings per share has grown from 17.06 to 21.60. This is in rupees, earnings per share. So, earnings per share is like that. Now, the bottom line growth was driven by some critics are there. They find the loopholes, that is where the TCS has lagged behind. So, one fellow says the bottom line growth was driven by other income, which has gone up by 59% quarter on quarter, but limited due to weak operational performance. The company had reported a profit of 7,901 crores in the quarter ended September. It's okay. What they say, other income has gone up. But so what? The net income has gone up. The operational income also has gone up. Even if you take away the other income and see, it's reasonably healthy. Much better than many others in the software field. The march is on. That's what I would like to say. Now, somebody else says operational numbers. Operational performances for the quarter was weak, as EBIT, earnings before interest and tax, declined 2.12% sequentially to 9,564 crores in Q3, and margins contracted to 25.6% against 26.5%. So, from 26.5 to 25.6 margins have contracted. That's what they say between the previous quarter and this quarter. But it happens. You see, the revenue booked is on account of different contracts. When the contracts differ, the margins differ, everything differs. But whether the margins are healthy, that's what we have to see. No, in spite of all whatever they say, what I feel is the earnings per share is healthy and price earning is very moderate. I don't say that 25, 25 something like that is very high for a company like TCS. You are getting 4 rupees dividend and huge cash reserves are there. Cash is accruing like anything, and they are spending that amount very wisely, and they are building platforms. See, the march is on, the growth is on, and the future is being built by TCS. So I don't think that TCS uh, has to bother about the small points. Some one or two small points will always be there. And during the quarter, TCS has also acquired W12 Studios, an award-winning digital design studio based in London. It has paid 66 crores to acquire 100% equity in W12 Studios. So mergers and acquisitions are also on. New platforms are being created. Old platforms are being strengthened. Trainings are on. So overall, I feel TCS is good for long-term investors. No doubt, 2018 was not good for price rise. But 2019 could be good. Thank you for listening. I'll be back with you with another good company. TCS is a company on the growth path, no doubt about that.